I think Uber will roughly double in value over the next 5 years, and I'm going to tell you exactly why in the next 5 minutes. Let's begin. First, let's understand the business. Uber is a two-sided digital marketplace. On one side, you have riders, eaters, and shippers who want a lift, a burrito, or a pallet move. On the other, independent drivers, couriers, and carriers who own the wheel. And Uber skims a take rate, a percentage of every transaction without owning a single car or kitchen or truck. The company reports three main segments: mobility, which is classic ride hailing, plus taxis, bikes, and transit tickets; delivery, Uber Eats, groceries, alcohol, and retail; and freight, which is matching truckers with loads. A newer, higher margin slice is in app advertisement, where restaurants or brands pay to jump the queue. Thanks to this asset light model and a global footprint in 70 plus countries, scale is massive. More users lure more drivers, which cut wait times and drives even more users. Your textbook network effect. Now let's look at performance. Since its 2019 IPO, Uber's stock chart has looked like a cyclone roller coaster, but the long climb is on. Recently notched an all-time highs of around 93%. Today's market cap is roughly about $180 billion, but it has pulled down a little bit from that all-time highs. The finances finally matched the narrative. 2024 revenue hit $44 billion, up 18% year over year, and Uber posted its first full year GAAP profits. Cash is gushing too, 6.9 billion in free cash flow last year, enough to fund $7 billion buyback. Quarter 1 of 2025 kept the streak alive with $1.9 billion in adjusted EBITDA on $11.5 billion of revenue. Yes, freight is still lumpy, but mobility margins north of 7% and delivery breaks even pushed the whole machine into the black. The operational turnaround is why Wall Street keeps nudging price targets into triple digits. Now let's look at the bull case and three segments here. First is just platform synergy and subscription glue. Uber One, a $10 monthly pass for ride discounts and free deliveries, already boasts 30 million members. It's the Costco card of the Uber universe, boosting order frequency and cementing loyalty. Every incremental trip flows through existing infrastructure, so margins widen without heroic spending. Next is the profit flywheel and asset light mojo. Because drivers bring their own cars and restaurants their own stoves, Uber's growth doesn't guzzle capital. As volume rise, fixed costs like insurance and support shrink per transaction. Management is laser focused on profitable growth, and that number backs it up. Free cash flow conversion sits near 20% of revenue. If that trend sticks, Uber can keep buying back stock or pounce on tuck-in acquisitions without tapping the debt market. Finally is autonomous vehicles and high margin ads, which is the future upside. Instead of moonshooting its own robo-car, Uber is the demand aggregator for everyone else's robo-taxis. New deals with WeRide, Motional, and Waymo mean Uber get a slice of autonomous rides without footing the research and development bill. Toss in a budding advertisement arm, promoted menu items, sponsor ride options, and you have a lever that could add percentage points to take rate without almost no additional costs. Now, the bear case, and there is one massive gorilla, and that is if US or European courts decide drivers are employees. Uber costs can balloon. Think health benefits, overtime, payroll taxes. A single unfavorable ruling can whack margins overnight. Meanwhile, competition is fierce. Lyft can still play the discount card, and DoorDash rules US food delivery with 65% of the share. If those rivals spark a price war or boost driver payouts, Uber might have to sacrifice take rate to defend share. Finally, autonomous hype could stall if robo-taxi stays stuck in pilot mode. One leg of the long-term thesis limps. Now, my prediction. To recap, Uber's platform moat is widening, the profit engine is revving, and future catalysts like autonomous vehicle partnerships and advertising add optionality. Against that, the regulatory wildcard looms large. One court case could jam the gears. Still, I believe that the flywheel of scale, subscription, and cash flow discipline tips the balance. So I'm planting my flag that Uber will roughly double over the next 5 years, implying about a 15% compounded annual growth rate. So there you have it. That's why I believe Uber will roughly double in value over the next 5 years. Now, what do you think? Tell me why I'm right or wrong in the comments. And don't forget to like and subscribe and go to fool.com/invest to receive the top 10 best stocks to buy now.